and connect with Amit Agarwal, CFO or Group CFO with Raymond. Amit bhai, good morning. Thank you for joining us. When we spoke to you last time, things were strikingly different on the demand front. You were confident that high inflation will not impact the demand as well as the category which you represent. Given that now inflation has come down and things are looking up in terms of consumer sentiment, has good become exceptionally better for you? Has अच्छा become बहुत अच्छा for Raymonds in terms of demand? I think you are on mute, sir.
Sorry.
There you go.
Sorry.
Yes, please.
Yeah. Thanks for having me on the show, Nikunj. Now, if you look at it in the recent past, for the last 3-4 months, what we have been seeing is in the wedding space, actually because of the weather changes and because of excessive heat, there has been a slight lull in the weddings, which normally gives us a big boost. But we all are expecting a very strong season coming back post Dussehra Diwali as well as the wedding season. So we are looking for that good and bahut acha period coming back to us somewhere in the October, November onwards. For the last 3-4 months, there has been a bit of a slowness because of inflation, seasonality, and so on and so forth. But I think we all are expecting very good season coming forward.
Where has the slowdown happened? Is it in premium category? Is it in rural focused category? Where has the downtrading started?
So actually, if you see, it is across the sectors, because what happens, especially in the summer months, you have a lot of rural weddings which did not take place or which has been either deferred or has been into a smaller manner. And therefore, we have seen in the rural side little bit slowness. And even on the premium side, people have been just watching on the sidelines. And I think we all are hearing that people should be back once the festival season starts.
I think was perhaps one of the grandest year for Raymonds, both in terms of turnaround, also stake sale, and the fact that your real estate business, in a sense, which was seeded, reached a scale and size. What should we expect for FY24 in terms of a corporate action or communication from Raymonds?
Actually, if you see the big corporate action, we have already told there are 2 or 3 things which we did already in the month of April. One, we sold our FMCG business for a value of 2,825 crores, which reflects almost 70 times of EBITDA, and which enabled the group to be completely a debt-free group, as well as have almost 1,500 crore of net surplus cash to drive the growth. The second big corporate action, which was always necessary for the business to be done, and lifestyle business had almost 1,800 crore debt. We are demerging the lifestyle business from Raymond Limited and bringing it into Raymond Consumer Care, where we sold the business for 2,800. So net of tax, we are getting somewhere 2,200 crores to be using for debt repayment and for growth. So the demerger of the lifestyle business into RCCL is another big corporate action. So at the end of the day, which will take almost like say 8 to 10 months from now, so next year you should have 2 pure play listed entities, which is net debt free businesses, one focused on the lifestyle business and another one focused on the real estate with the investments in engineering and denim business. So therefore, what is happening is you have created one consumer-led business and one which is a real estate-led business. So these are the 2 big actions with the cash available for you to grow the businesses, each one. As we talked about earlier,
right,
we have big plans for distribution strength growth.
Okay, my follow-up question is that you've incubated the real estate business, you have demerged the consumer care business. The engineering business in the overall scheme of things for Raymonds is no longer a large business or a core business. So is it a matter of time that you would be selling it, or this will be part of your total portfolio for at least FY24?
So if I look at it, engineering business today is almost like a 950 to 1,000 crore business. And with zero debt and delivering good 15-16% EBITDA margin. So therefore, and good ROC. So in this year, we are continuing to have this business. At some point of time, we will evaluate, because the idea for an IPO for the engineering business in the past was to go with the theme of making sure the group becomes a net debt-free group. And therefore, what we did was to ensure that in order to achieve the net debt-free business, we sold the RCCL FMCG business in order to make the group debt-free. Not only debt-free, rather have the cash. So therefore, for the time being, engineering business continues to be part of the group. And at some point of time, we will evaluate the right move for that business.
A bit more about the real estate business, how the latest ventures have done, and more importantly, what is it that you're doing in terms of the plans to monetize the residual 60 acres of land that you have in Thane?
Actually, you see, real estate has been doing very well. As Nikul pointed out, in the last 3.5 years, we have been able to build this business to very, very strong level. We have, because of our manufacturing mindset, actually, we have been able to deliver the 30% of the first phase inventory 2 years ahead of RERA. And as we speak today, the first 2 projects have already sold to the tune of 80-82%. The third project, which we launched recently at Thane, even in the first 3 months, we have been able to sell more than 25% of the project. So actually, if I look at it, we are left with still 60 acres of land. And over a period of the next 4, 5, 6 years, we plan to develop into the real estate, especially the residential area between the 1, 2, 3, 4 BHK apartments. And beyond that, if you look at it, our real estate journey will be expanded, or the business will be expanded through the JDA route. We have already signed one project in Bandra, which we expect in the next 5 to 6 months to be launching that project as well. So we are having many more JDA projects in the pipeline, which should be signed and closed sooner than later.
You talked about the demerger and how the listing is going to take place about next year. Is there an exact time frame that you have in mind or you're working with?
Yeah. So actually, you see, this whole process takes normally 12, 13 months. So we started this process somewhere in end of April. So we expect that by end of March, April next year, that is 24, we should have these 2 entities. However, let me clarify that the effective date of the demerger will be 1st April 23 onwards. So you will have next year, when the demerger happens, that the business of lifestyle would be from 1st April 23 onwards as a standalone business, and Raymond Limited as a standalone will have the real estate business with investments in engineering business.
Value to understand the value of the real estate business, because there are different ways in which you arrive at valuation of the real estate business: land bank, cash flow, EBITDA margins, booking per square feet. What is your understanding of at where the business could be valued?
Look, today, if you look at it, we have delivered 1,000+ crores of revenue with a 25% margin. If I take my new bookings, has come to the tune of 1,600 crores. So I think, and that is again going to be 25-26% margin. Even the businesses which we are doing on the JDA should deliver me a 25% IRR. So look, it could be potentially the cash flows of the business, because we have a consistent cash flow. And more so, what is important for us to understand is that we are driving this business of real estate as a net debt-free business, because the way we sell our business and the way we do the construction, because if your inventory is sold very well and you're constructing it fast, you don't need to put your equity capital or a debt capital into the business in order to complete the project. Initially, you need some capital, which in the next 18 to 24 months is available back to you to redeploy. And if I look at the 3 projects which we are running at Thane, this would deliver me roughly over the next 4 to 5 years, 1,400 to 1,500 crore of net free cash flow.
Let's get the numbers right again so that we don't miss it. You are looking at least 400 to 500 crores of cash flow every year from the real estate business. Correct me if I'm wrong.
No, so actually it would not be 4 to 500 every year. It would be starting with a lower number and then increasing it to 500, 600 crores over the next 3 to 4 years per year.
The real estate companies which are in the business of real estate, and I'm looking at some of the listed companies here, they have cash flows in the same range what you are indicating. So how will you achieve it? Because some of your peers who've been in this business from 20, 25 years, they struggle with this kind of a number.
Yeah, but Nikunj, if you look at it, even when we started the business with a humble start of 250 crores, everybody thought that for us to achieve 1,000 crore revenue and a 1,600 crore booking is a tall order. But this is behind us. Second, I think the most important is the mindset with which we are doing this business, that we are very focused in terms of executing the project. And the biggest confidence which the customers get is when they see the project has been completed, delivered, and is a good quality project. See, the kind of amenities and the lifestyle which we are giving enables us to be more confident of achieving this. And as we speak today, we are constructing 4 million square feet. If I take a 20,000 rupees to 22,000 rupees, and you can very well imagine that this is a cash flow practically given. I don't have to do anything significantly different in order to achieve this 1,500 crore over the next 4 years, the cash flow.
For taking time out and giving us a lot more clarity about the road ahead for Raymond. So talking about that demerger of lifestyle into RCCL over the next 8 to 10 months, and the management as well, alluding to the fact that as of now they are expanding through their JDA projects. There are lots of projects as well in the pipeline, and they are looking at strong bookings as well down the line.